Welcome to Macro Money Talk, where we uncover the hidden financial mechanisms that shape our world and determine your economic destiny. Have you ever wondered why some people seem to access capital effortlessly, while others struggle to borrow even a small amount? We often mistake easy money for cheap money. But in the financial world, these two concepts are actually completely different things. Today, we will dissect the definition of cheap money and reveal the strict hierarchy of who gets to touch it first. To understand the system, we must first redefine what cheap money actually means in the context of professional macroeconomics. Cheap money is defined by three specific characteristics, starting with an interest rate that sits very close to the inflation rate. The second characteristic is the duration, offering borrowers a long horizon of 20 to 30 years to repay their principal. The third and most critical characteristic is collateral, meaning the loan is always backed by real assets like real estate. Now that we have the definition, let us explore the hierarchy of access to this powerful resource called cheap money. At the very top of the pyramid sits the government, an entity with the unique power to tax and print money. Governments have the lowest risk profile because they can simply print more currency or raise taxes to repay their debts. Because of this sovereign power, lenders view the government as the safest borrower, granting them the cheapest money available anywhere. Just below the government, we find the major banks and large corporations, often described as institutions that are too big to fail. These entities are protected by the system itself, ensuring they have access to capital, even when the economy faces a downturn. They act as the primary distributors of money, receiving funds directly from the central source before passing it to others. The third level of access belongs to asset owners, those who hold tangible wealth like real estate, stocks, or profitable businesses. These individuals can access cheap money because they have collateral to offer, significantly reducing the risk for the lending institutions. Banks are willing to lend at lower rates because if things go wrong, they can seize the asset to recover capital. Finally, at the bottom of the pyramid, we find the rest of society, the ordinary workers and small consumers. This group only has access to what we call expensive money, such as credit cards and unsecured personal consumption loans. While the wealthy pay minimal interest, the working class often pays double-digit rates, trapping them in a cycle of debt. The system forces them to work harder just to service the interest, making it incredibly difficult to accumulate significant wealth. But why does the system operate this way? Is it purely malice? Or is there a cold logic behind this structure? From the perspective of a bank, they do not care about your hard work, your dreams, or your personal moral character. Their primary concern is the certainty of capital recovery, ensuring that the money lent out will eventually return with interest. Assets provide that certainty. They reduce the uncertainty of the future, allowing the lender to lower the cost of borrowing. Without assets, you are asking the bank to trust your future income, which is inherently volatile and uncertain in their eyes. This uncertainty translates directly into higher interest rates, which is essentially the price you pay for the bank's higher risk. Now, let us look at the massive advantages that cheap money provides to those lucky enough to reside in the upper tiers. The first major advantage is the ability to endure crises, often referred to as holding through the losses during downturns. Cheap money acts as a safety net, allowing the wealthy to survive bad months or even bad years without collapsing. In contrast, those relying on expensive money must be profitable immediately, or they face bankruptcy very quickly when cash flow stops. The second advantage is the ability to use inflation as a tool to erode the real value of their debt. If you borrow at a low fixed rate for 30 years, inflation will eventually make your monthly payments feel much smaller. Essentially, the wealthy transfer the cost of inflation to the lender, paying back the loan with money that is worth less. The third advantage is the luxury of long-term thinking, allowing for decisions that may take decades to bear fruit. When you are not worried about surviving the next month, you can invest in projects that create massive generational wealth. Conversely, expensive money forces a short-term mindset where survival is the only goal and long-term planning becomes impossible. This structure creates a self-reinforcing cycle where the rich get richer through leverage, while the poor struggle with expensive debt. Understanding this mechanism is the first step to changing your position in the hierarchy and accessing the power of cheap money. To move up, one must focus on accumulating assets that can eventually serve as collateral, rather than just increasing income. It requires a shift in mindset, moving away from consumption debt and towards strategic debt that builds long-term value. Remember, the government starts the flow, but it is up to you to position yourself to catch the water. Banks are not your enemies. They are simply predictable machines that respond to security and collateral with lower interest rates. Build your foundation first, secure your assets, and then you can unlock the tools that the wealthy use daily. Imagine having a loan where the payment stays the same for 30 years, while your income and asset value rise. That is the magic of cheap money. It turns the destructive force of inflation into a wealth-building assistant for you. Rejecting expensive money is just as important as accessing cheap money. Avoid consumer debt at all costs. Every time you pay high interest, you are effectively transferring your hard-earned wealth to those at the top. Once you see this truth, you can no longer look at debt in the same way ever again. The game is rigged, but it is playable if you understand the rules and move your pieces with strategy. Every financial decision you make is a choice between immediate gratification with expensive money or patience for cheap money. Patience is the currency of the wealthy. They wait for the right terms while the impatient pay the price. Recite the mantra: low interest, long duration, and backed by collateral. This is the holy grail of finance. When you have these three elements, you are no longer begging for money. You are a partner to the bank. Share this knowledge with your community, because financial literacy is the only way to break the chains of expensive debt. At Macro Money Talk, our mission is to arm you with the insights needed to navigate this complex landscape. Start planning today. How can you acquire your first collateral? How can you improve your creditworthiness for lenders? It does not have to be a mansion. A small asset is the first step towards accessing the tier of cheap money. Divert the flow of the river. Make the system work for you instead of working endlessly for the system. True wealth is not just about luxury. It is about the peace of mind that comes from financial stability. It is time to reverse the flow. Stop paying interest and start collecting assets that appreciate over the long term. Remember the distinction. Cheap money builds empires, while expensive money builds prisons for the working class. Take action now. Eliminate the toxic debt that drains your resources and blocks you from building real wealth. Let compound interest work for you through assets, rather than against you through high-interest consumer loans. A new day is dawning for your financial future if you choose to apply these macroeconomic principles. Teach this to your children. Break the cycle of financial illiteracy and give them the keys to the kingdom. Knowledge is the ultimate leverage. The more you learn, the better you can navigate the treacherous waters of finance. The journey to cheap money is not easy, but the view from the top is worth every step of the climb. Take control. Do not let the banks dictate your worth based on a lack of understanding of their rules. The machine is neutral. It grinds down the ignorant and elevates the informed. Choose which one you will be. Walk into the bank with confidence, armed with collateral and a plan, and watch how their attitude changes. When you align your interests with the bank's need for security, you unlock the vault of cheap capital. Financial freedom is not about having infinite money, but about having access to money when you need it most. Assets are the bridge. They are the only path to cross the chasm from expensive money to cheap money. Start planting your seeds today. It takes time for collateral to grow, but the harvest is abundant. When the government prints money, it rains on everyone. But only those with assets can catch the water. Stay calm in the chaos. The principles of cheap money remain constant regardless of the daily market fluctuations. Let these principles be your compass. They will guide you through the fog of economic uncertainty and misinformation. Open your eyes to the reality of the financial system. It is hidden in plain sight, waiting for you. Stack your assets, brick by brick. Do not rush. The pyramid of wealth is built with patience and discipline. Sacrifice the illusion of wealth today for the reality of wealth tomorrow. That is the trade-off required. Adopt the macro perspective. See the forest, not just the trees. See the system, not just the struggle. There is no feeling quite like paying off bad debt. It lifts a weight from your shoulders instantly. Unlock the vault. The tools of the wealthy are available to anyone who learns how to use them correctly. If you found value in this video, share it with someone who needs to hear this message today. Join the conversation. We are building a community of informed individuals who refuse to be victims of the system.
Time is money.
Visualize your future self, the version of you that has mastered the game of money and secured freedom. Time is ticking. Every day you wait is a day of lost opportunity to compound your wealth and assets. Take the first step. It is the hardest one, but it sets you on the path to financial sovereignty. The opportunities are endless for those who are prepared. The market rewards the patient and the educated. You are the captain of your ship. Do not let the currents of the economy drift you into the rocks. Let knowledge be your lighthouse. It will keep you safe when the economic storms inevitably arrive on the horizon. Security feels better than spending. The joy of safety outlasts the fleeting thrill of a new purchase. When you understand the gears, you stop fearing the machine and start using it to power your own dreams. Lift others as you climb. True success is not just about your own wealth, but empowering those around you. Deep roots withstand strong winds. Build your financial roots deep with solid assets and low leverage, cheap debt. Freedom is the goal. Money is just the tool. Never confuse the tool with the ultimate destination. You now hold the key. The concept of cheap money is no longer a mystery, but a strategy. Rewrite your story. It does not matter where you started, it matters where you decide to go from here. In the digital age, information is gold. You have the information. Now you must execute the plan. Stay focused. The distractions are many, but the path to financial independence is narrow and requires discipline. Aim for the target. Do not settle for mediocrity when excellence is within your reach through smart choices. Rise above the noise. The daily news cycle is designed to scare you. Macroeconomics is designed to guide you. Close the chapter on financial ignorance. Today marks the beginning of your new life as an informed investor. Walk boldly into your future. You are armed with the knowledge that the wealthy have used for centuries. The world is vast and full of abundance. There is enough for everyone who learns how to access it. Thank you for joining us on this journey through the hidden mechanics of money. We hope it was enlightening. If you want to stay ahead of the curve, make sure to subscribe and turn on notifications right now. Leave a comment below. Let us know which tier of the pyramid you are in and your plan to rise. We have many more deep dives coming soon, covering everything from central banking to personal asset management strategies. This is Macro Money Talk, helping you decode the complex world of economics to master your own personal wealth. Thank you for watching. Remember, money is a tool, not a goal. Use it wisely. See you next time.